So a question that often gets asked is, are financial advisors paid by mutual funds? So typically the answer is going to be yes. So when an advisor recommends a mutual fund, that mutual fund will typically pay them a recurring fee, 12B1 fee in commission, anywhere from 0.25 to 1% per year for the advisor using that particular fund. Now, advisors that work on commission often will also get paid a 1.25 to 2% commission on the initial sale of a mutual fund or the purchase of a mutual fund by the client. Now, there are some exceptions to this where some firms will charge a flat management fee of, let's say, 1% to manage the assets, in addition to also collecting the back end fund fees paid directly to the advisor. There is a way to avoid this. One is don't ever use mutual funds. They're tax inefficient, and quite frankly, I think the best asset managers have walked away from mutual funds years ago. Most of them are using exchange traded funds now, ETFs, which would not be paying a commission to the advisor. But another way to do this is also look for a fee-only firm. So like our firm at Wiser Wealth Management, first of all, we don't use mutual funds. That's really antiquated investing, but we would never use a mutual fund, especially that ever paid us. So for example, if I chose a mutual fund for a client because that was the best for them, then I would never get paid by that fund company as a fee-only advisor. As a fee-based advisor, you could get paid by the mutual fund company. So it can be very confusing from a consumer or client standpoint. And unfortunately, the SEC has very strict guidelines on the disclosures, but disclosures aren't really clear. So really the people in the end, investors really have a hard time discerning how the advisor gets paid. So typically you want to always work with a fee-only advisor, a fiduciary fee-only advisor, because that way you're removing all conflicts of interest from the relationship. If there are any conflicts that arise, that has to be disclosed in proper disclosures upfront to the client. So typically mutual fund or advisors are getting paid a management fee plus to get the trailing fee from the mutual fund company as well. That's not how I think the industry should work. But until the SEC adopts a fiduciary standard for all firms, there is a difference in conflict of interest amongst financial advisors.